Ooh. Yeah, we talked about this in the first session. We talked about types of SNR. We talked about the classical SNR. Then we've talked about the gap. So by this session, I want to finish up with the type of SNR level. This is then the retest of it. This is SNR level. This is the retest of it. Price come and retest it, then push higher. Then we have the gap, which we show in the other. The gap. Let me go to trading view and get a trading view. Trading view. We're doing trading view before the time. Where's trading view? Trading view. Okay. Yeah, this is a trading view. Then we are talking about the breakout of SNR. This is the third types of SNR, which we call the flipped. How we call it flip is because you flip it. That's if it was a resistance that was breaking through, it now turns to what? It now turns to a support level. So resistance here now turns to a support level. That's why we call it a flipped SNR. So you flip resistance for support. If it is support and you see a breakthrough out of it, that means you flip a support for resistance. If price breakthrough is like this, for example, so you flip it for resistance. So here price breakthrough a support level here. So you flip it as it break out. You got the breakout here, right? With a close below it, this is a confirmation of the breakout. You must allow price to close below it, not just price break, because at some time it will still withdraw back and end up to become what? To become a shadow. But here with a full body below, with a close over below this support level, now that means a breakout. That's a confirmed breakout. So you wait for price to pull back to it. You know, I told that if this price is going to become a bearish candlestick, it must first of all go up. So this is the up that it went to now to test this a broken support, which has become a resistance here. So you now start trading from there. So let's take out this place. For example, we take out this place. If we take out this place, let's see how it happens. This is a breakout of it, right? So we are waiting for price to retest this place for a breakout. We are waiting for this price to come back and retest this place. If it does not retest here, you don't have a confirmation. But if price can come back and retest this place, this zone, that's you have a confirmation. You don't sell directly at the breakout because of what? Because price will still pull back. You can still pull back to a level of this place. You can imagine if it's eating into your stop loss, you will not become uncomfortable. So that's why you need to wait for what? For a retest. So once you get a retest and you see price coming back into the opening, into the opening, so you take your sell straight. Can you imagine price open here, you pull back to touch this level, As price continue from this place, you start selling. You start selling from here. Your selling will start from here. Yeah. So you have confirmed a retest to this place. Your selling will start from there, and that is how from here to this place you have gotten almost about there. You've gotten almost about there. From this set to this place, you got almost about in 2 days. You got 128 pips in 2 days. It has given you your DC because why he returned back to that place, because he has a barrier here. This is a level here that got its return, that returned that place upward. When we got to talk of a storyline, yeah. So that when you are trading, you have to look at what are those things that may return your price. Yeah. So what returned this place now from not selling into like this place is because of what? Because of all these levels, all these levels, all these levels. When you go to the story, like let's deal with the DC first. How does price react to each level of support and resistance? Each levels. Then, for example, this place now, this is a breakout. This is a breakout. We have a breakout here. We have a break. If you are going to buy into this place, this is a breakout, right? You have a gap here, a gap a gap here. Price tap into it, close below it. If you had sold it to this place now, for example, you have sold it to this place. You have sold it to this place. You can imagine it take you back again, and the next day you have this a breakout. So you have made maybe like a profit of something like a profit of to this place. You have made 52 pips. Fine. At the end of the day, maybe you want to still continue to sell, or probably you are not a scalper, or maybe you are a swing trader, you want to sell. You see price returning you back upward, fine. But if you're a scalper, you have secured that 52 pips. So once you get this a confirmation here, price break out of this place, right? Out of this gap, it ended up to become what? To become a breakout. What do? You wait for a price to retest it. Price must retest this place here and then start switching higher. It must retest it. I told you that for price to become a bullish, it must first of all go down. So you allow it to fulfill that purpose first. You allow price to fulfill that purpose, to first of all pull back. Once it pull back, it has created a low. Once it has created a low, and you start seeing it moving higher. It has created a low like this, and you start moving higher like this. You tap into it. You allow it to go down first. You allow it to go down first. Once it has touched this place with a wick, and you start withdraw, you start seeing the withdrawal, you click into it. You can imagine we have gotten our DC here. So what do? You put up your long position, because you have seen a confirmation here. You have seen a confirmation. Probably your stop loss will be below here for a safe mode, or below here. Well, let's put it at a safe mode. For aggressive, you can put your stop loss here, but for a safe mode, you put it here. So your selling is when the price has returning, because this is a daily chart. So once the price has returning above the opening price and is going up higher, you see the DC, and your target will be what? Your target will be the next fresh level. This is fresh. This is fresh. This is a fresh level. The next fresh level. And what happens? You see how the price will move, and wow. So you've gotten almost about how many pips there? That's almost about 422 pips in 4 days. 422 pips. 422 pips. So you can see the win rate behind this thing. I'm not saying it's perfect 100%, but at least out of 5 pips, you must have, out of 5 trading, maybe you take a 5 trade in a week, you must have 4, 3 or 4 that will give you wins. So it's a matter of probability. It's a matter of very simple, very, very highly predictive, very simple and highly predictive stuff. So this is a gap. This is not a breakout. This is not a breakout. This is a breakout. This is not a breakout. So note that. Note that this is a breakout. This is a breakout. Price closed below this SNR, right? It closed below this SNR. A retest to it will give you your sell rate. You can imagine what you have gotten from that place to here, and your stop loss is never hit out. So once you get a cover, price breakthrough all this area, you draw the stop loss to this level to protect your profits. And you can imagine to this level what you capture. This is a breakout. Price tap into it here. It pull upward, give you a little profit, then probably it did not hit your stop loss here, because you have put your stop loss around here. This will be your stop loss area if you are buying to that place. This will be your stop loss. And thank God that it pulled back, but it does not, almost about half of the DC, and it starts giving you another good profit upward. You get to this new level of fresh level of this thing down. You sell immediately. You sell into it. You sell into it. This is what this is an SNR. Price tap into it. Price tap into it and drop back. You sell immediately. You are not buying anymore. Seeing this signal, you're not buying anymore. So you sell into it. This is a breakout. We got another breakout here. This is a breakout. This is a breakout of this gap. A breakout, a pull back to it. Your stop loss will be here. The highest high will be your stop loss. This high will be your stop loss. Always protect your profit. Short. We'll enter short. So the highest high will be your DC. You can put your stuff here. Then your first target will be here. And price fully enter your trade. It starts coming down. You see it coming down till you capture the whole pips there. Next target will be here. Next profit target will be there. And price move from that place. You can imagine price never went upward to hit the stop loss. So once it starts coming down, what do? You protect the capital. You move the price, the stop loss to your break-even point where you enter. Once price move higher, that means lower, more lower, you draw the stop loss again. Protect your part of the profit. Or you exit. If you enter like maybe 5 trade or thereabouts, you exit like 2 of them, 2 trade in good profits. So whatever that happened to the rest of this, you have already taken our profit. So that's how to trade. We'll come when we how to enter a trade, how to manage your trade. We'll do that. So therefore, know how to identify breakout, how to identify gap, how to identify the regular SNR, which we have done. This is a breakout here, for example. This is a breakout, price breakout of it here. Breakout, but there was no retest. You leave it. If it does not, a trade does not miss your rule, you leave it. Don't force trade upon yourself. And you don't have to trade, or if it does not meet the rule, you leave it. Like this place now, it is a breakout. It meets your rules, you take it. See the big profit. This place, you tap into it, it meets your rules, you take it. This place, you tap into it, you take it. You tap into it, you take it. So if it does not meet the trading objective, you leave it, let it go. Another day, there's another day for you to trade. This is a breakout. See the breakout. And price tap into it. A breakout. Price come back and tap into it, and you continue to sell. So that is how to identify the breakouts. And then we have the last one, which is the head and shoulder pattern. Head and shoulder pattern. What is head and shoulder pattern? What is head and shoulder pattern? Head and shoulder pattern is simply like this. The left shoulder, the head of a human being, then probably like this. Then the right shoulder. This is right shoulder. For sell. That's for sell. That is for sell. So this is the SNR. This is you are watching. Yeah. You are watching here to sell. Sell at that place. You sell there. You sell there. If you cannot identify that, go for the one you can master. It's not compulsory that everything you see you like this. This head and shoulder pattern for buy. It comes from the left shoulder. It gives you the head, then another the right shoulder, then shoots higher. That's exactly what happened here. So that's exactly what happened there. This is buy signal. This is a buy signal. Buy. Buy at what? At the right DC. Yeah. This is what's happened here. See it? This is the DC. Then the head, the right shoulder, price starts moving higher. So if you don't know how to master this, go with the one that's simple to you and do you. It's not. That's why I give this thing different so that you can. If you don't fall into this one, you fall into this. You go with it. It's not compulsory that you must, this is what you must use to enhance. You understand? So some people say, okay, they cannot identify the head and shoulder pattern. Fine. If you cannot identify the head and shoulder pattern, then go for the one you can identify. That's all. This head and shoulder pattern here is still head and shoulder pattern because this is the left shoulder, this is the head. The head must come up higher if you are buying, if you are selling. If you are selling, when you are buying, the head must come lower than the two shoulders, just like human being head than the shoulders. If you want to sell, you stand, you slew these two shoulder and the head. If you want to buy, you turn it upside down. The head comes lower than the two shoulder. That's just it. But if you don't know how to master this, go with the classical gap. Gap is there, classical is there, then the breakout is there. That is all. So you go with those one and move your profit. Forget about head and shoulder pattern. So it depends on what fits into your lifestyle or your own understanding. So that is what I. So I've shown you the 4 types of this thing now. Then how to the next this thing we go is what validate. You must look for what validates your SNR. Don't just pick trade like that. You don't pick a trade if it does not meet this is a rule-based trading plan. If it does not meet your rule, the rules there helps you to do what? It helps you to filter out the bad trade from the good one. I mean, the good trade from the bad ones. That is the objective of this thing. It helps you to filter out the bad setup, so that when you are trading out of this, if you must look out for the potential trade. You don't just pick a trade and trade. Say because you must trade today, you must trade today. No, that's not how to trade. It's not how to trade. If you see the setup, the good setup, and you trade once, you can capture every other people that is trading 24 hours. They are blooming, they are swimming. You go and rest and relax. You take your profit. You've met the target for the day. You are okay. You relax. So you must draw out a plan. You must draw out the plan for the day, for the week, for the month. Draw out your plan. How many pips you want to capture in a week? You don't draw a plan for a day. You don't draw a plan for a day, because sometimes you can have a rough day. Sometimes that's why I say you don't draw a plan for a day. You draw out from the week, then a month. Then after a month, you talk of a quarter. How many pips you want to capture for a week? Then how many pips you want to capture for a month at the end of the month? How many pips you want to capture for the first quarter? That's how to trade. Do your trading journal. So that sometime when you have a rough day, you use the second day to balance up. It is what happens at the end of the month or at the end of the week that that summarizes whether you are making a progress or not. You cannot use just a day to measure your distance. Yeah, that's what I'm. Yeah, so some people they use it, but to me, that's not a good idea. Yeah, that's not a good idea. So it is what happened at the end of the week, percentage you get at the end of the week that matters. If you get 2%, if you get 3%, no matter how rough the sum of the days, if you get 3%, 5% at the end of the week, you are still on top. You are still on top. So the next week, we will use the next week and use the next week to boost up. Yeah. So the first thing we look at for in SNR, what validates your SNR is to see a touch with a body, with a week. First validation of an SNR. How do you validate your SNR level? Let me put it up for here. What validates your SNR? What validates, or let me say validation of SNR. Validation of SNR. You look out for this validation of SNR level. Yeah. So the first thing on the list we have here is shadow. We have what we call shadow. Shadow. First one, we have shadow. We have shadow. The second, we'll talk about we talk about miss, what they call miss. Then third, we talk about liquidity sweep. Yeah, so that's what validates your. So somehow the second one might not be compulsory, because sometimes you have a single candle touch. So let's go to the first one. The first one, we talk about shadow. Shadow. What is shadow? Shadow is simply a candlestick wick. It's the wick. This wick, you see this tiny wick, is the wick of the shadow. The wick of the shadow. Upper wick, then the lower wick. Upper wick, lower wick. Upper wick, lower wick. That's what we call me by shadow. So now, how does shadow validate an SNR level? If we cut out this place, for example, let's cut out this place. Let's say this is where we are right now. This is where we are right now. Yeah. So now we draw our SNR level. This is our SNR level, right? It's our SNR level. So what do you want to see in this level? What are we going to see? Do we see the body or the wick? Do we see the body or the wick? You know, we told you in the beginning of this course, I told you that the market is all about what? It's all about price manipulation or rejection. That price will reject a particular level at the top because it's resistance. You trade into, we are only going to be trading on price manipulation. And that is when we see a rejection at support and resistance level, you trade. That is our objective here. We want to trade into the manipulation of the market because that's what controls the market, whether you like it or not. So they drive the market to the up and down by doing what? By manipulating the market to their own gain. So we want to follow them. You must not trade against them. If they manipulate the market upward, you must trade upward. If they manipulate it downward, you trade downward with them. So that's what we want to do here right now. We are going to see for them, for those people to do what? To take away this resistance. We are going to see. So we want to see a price rejection of that resistance. That's what we want to look at. That's what price rejection at the level of this what? Of this resistance. This is a resistance now, right? This is a resistance. This is a resistance level. So we want to see a price rejection of this level. How do we? What is a sign of price rejection? I tell you, is simply a wick. When you see a wick, if a candle forms like this, it went higher. So this forms the high of the candlestick, right? This is the high, right? Now, by the time this candle starts coming down, this is the high of the candlestick. The high of the candlestick. We want to go back to now to how candlestick is formed. So that's the high of the candlestick. While this is the low of it. This is the low of it. Price has come. It opens here. Low. Low. That's the low, right? Now, I told you that it must therefore come down. It must, if price opens, that means price open higher. It must therefore come down to form the low of the day or of that particular time. So what happens is that it opens here. it opens there, comes down to form the low. It to come down to form the low, then start moving higher. This is the opening. Start moving above the opening to go and form the highest level, the high level of the day, or of that trading week. It will now come down to close below here in order to be a bullish candlestick. Now, what happens when price starts with coming down to this place, right? What happens is that this place, from this place to this place, represent what? It represents a shadow, a wick. You can't see it as a full body. It represents a wick. This place to this place, as price was going back upward into the opening level, this place will start becoming tiny. So that's how candlestick is being formed. It start becoming tiny. So the range from this low to this level will be formed as a what? As a wick. As a wick, the shadow. What we call the shadow. So this from this place to this place represent only the body, the body. This place, this open to this close now represent the body. This place to this place represent the what? The upper wick. Then from this low to the open here represent the lower wick. So the wick are used as what? As a price rejection of prices. Rejection of prices, up and down, up and down. They use it to manipulate prices up and down, like this one now. This wick now, denote it indicates the rejection of this lower level here. This place represent the rejection of a higher level here. This level, all this wick you are seeing here, all this upper wick represent a rejection at an upper, as the upper band, which is resistance. The lower wicks represent the price rejection at what? At the support level. Just get that knowledge. So that you use it to trade into what? Into your SNR. So when you see price come into this place now, if you see price come into this place like this, if therefore come down, they now broke through it, and you now see it does not close above it. You now see a rejection, and you see a close, finally a close like this. Like this. So that means this place to this place represent what? It represents a wick. It represents a wick. Once you see a wick there, that means that is simply a price rejection of the resistance level. Of the resistance level. So as you see it like that, what do? You see it like this, and price starts coming down, coming down, coming down, coming down. No longer with a this now is with a wick. A wick. Well, this is not I want you to form at the middle. It's trying to form here. Anyway, it's a wick now. Okay. So it's a wick. You want to see a wick here. You want to see a wick, not the body. If it is a body, that is a volume. That means this thing will go up. If it tap if it ends with a body like this, or like this, it will go up, or like this. As long as you have a close above it, not with a wick here. That means this thing is what? It is an invalid sell. It's become a breakout. It's no longer sell. It become a breakout. Unlike this, you see what happened here. See what happens here. See what happens here. It's different from this place. This an SNR. This is a resistance, right? This is a resistance. No network is. This is an SNR, right? You see it. You see weak. The two candlesticks were weaks. You wick up the resistance level, close below it. You can imagine what happened. Price closed downward. But for this place, you have what? You have a body close above it. You have a body that close above this place. See a body. So this is a different thing from here. So we always look out for a wick. If you are going to sell there, you look out for a wick. Even after a breakout, you must not sell if you don't see a wick that touches the SNR. don't take a trade without a shadow touch. See, for example, this place now, this is a breakout, right? But what happened? Price touch it with a wick. It ended up to become a wick, not the body. This place now is a wick. This place does not come up here. But here we have a wick here. See it here. We have a wick. It touches it with a wick. It not ended. It didn't end up to become a body, but a wick. So you must look out for a wick. A wick validates an SNR level because it indicates what a price rejection of that level. If you don't see a wick, you don't trade. Take note of this validation too. If you don't see a wick, you don't trade. You must confirm with a level with a wick. You must confirm a level with a wick. If you play that play forward now, you see what happens. Price tap into it and ended up to become what? A wick. So once you get a close below it, you sell straight. You sell immediately. Once you get a close or a wick or a price rejection off that level, you are selling. Now you can sell, not where the body is still there. You want to sell. No. So you wait for your validation. And what validates you is the wick. You want to see that place ending up to become a wick. Yeah. So before you can sell into it. So that's what validates yourself. For buy, if this is if this is this is a wick. Sorry, this is a gap level, right? You have a gap level like this. You have a gap level like this, and the next candlestick, in wick it, you sell, right? Another one, you see a close above it, you don't sell anymore because this indicates a what price has returned into what? Into buying. You don't sell. You don't sell anymore. And because if you watch carefully here, this is what? This is support. Right from this place, you must have get to know that this thing is doing what? Is going up. Sorry, this is not support. Sorry. It is this one that is support. Right. It is this one that is support. So because this price has closed above this gap, then you are now going to wait for what? For a week to what is a breakout now? For price to tap into, to open here, comes lower, tap into this place and moves higher before you do what? Before you buy. You are going to wait for confirmation of that week at this place. Week must touch it. Not you want to see this. You want to see this. What is something like this? Not the body with the body now, so that you can buy above. What is something like that? So let's see what happens after the see the week. Exactly what you see the week. So what do? You put your buy position here. As you see it has confirmed. See the withdrawal. It has confirmed. You put your stop loss below here. Then you target the high, the next high of that move. You can see the price hardly come down. It hardly come down to put your stop loss after confirmation, after that validation point. Price hardly come down to it. Gives you a very high probability of winning. It gives you a very, very high probability of winning. Now see this place, for example, this place. If you were here and you come to this place, you see this is a gap, right? This is a gap. This is a breakout. Let's move forward. Take care of this place first. Let me first take care of this place. Right? You see, this is a gap. Sorry, this is an SNR. This is an SNR. This is a support level. It's close below the this. You don't buy it because we are to buy here unless if you see a week. If you see the place ended up to become what? To become something like this. To become something like this. So that we see something like this with a body. With a body like this. That's when we will buy. But it doesn't end up, end up like that. It ended up to become what? To become a bearish close below the support. Like what happened here too. So the body close below it is a confirmation, is a validation of that breakout. You want to sell into the breakout. But you must, when you enter, you must wait for a retest of this place. With what? Is it with body or with week? With a week. You want to see 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 something like this. The price must make like this. You want to see something like this. Then a rejection that will cause that this thing to come down like this. That's what you want to see. Please, not this. You don't want to see something like this. No. And you don't want to see something like this. No. Even if it is just like this, it's still okay. It must have a week. It must have a week. A week. A week. A week. That's very important. A week validate your SNR level. So what do? You put up this, you see a week, that's a week there. So you put your short position, put your short position here. You can put it here, you can put it above here, but let's put it here first and see what happens. This is an SNR level here. And draw your distance to this level of this place. And you can imagine, because of that confirmation there, that validation, it gives you good trade. So it's a rule-based trading plan. You must wait for a validation. And here we got another this here. For a breakout, we got a good this here for a breakout. This is a gap, right? This is a gap. See a gap. So this is how to trade a gap. This is a gap. We want to see a wick that will touch this place and we drop back below it. That's all we need. Very simple, very simple. This is very simple. No indicator, no this is just a candlestick movement along at resistance and support table. That's all you need. Just follow the simple rules. That's all. It ended up to become what? A withdrawal. See the wick. See the wick. So you set up you set up another trade, and because you're already selling from here, you're already selling from that place, from this breakout, you're already selling from there, and you added another this into it. You added another this into that place. This will be your stop loss. This will be the entry price. You added another sell because of what? Because this has given you another a valid sell. A valid sell. So you take it, you can imagine this one will add the first one will be reading in profit, the second one too will be going in profit. You see another this in here too. You added another sales. You see it? This sell with a week validating the sell here. You put another sell is coming down with it. This place, another sell with a week. It validates it. It came down. This is a daily chart. Enough people. So that's how to trade using your what? Using your week to validate an entry. You use the week to validate a touch of SNR before you enter a trade. Before you enter a trade. When we come back, we talk about the miss and the liquidity sweep. We could talk about that. So please, I want you to open up your mind for what